If you're considering investing in cryptocurrency, it can be overwhelming at first. However, crypto offers high growth potential, albeit with significant risk. A small investment made in Bitcoin 10 years ago would now be worth a lot, showing its potential for high returns. The appeal of crypto lies in its volatility and high returns, but it's crucial to approach it with caution. Before you start, it's important to understand that you don't need a huge sum to invest in crypto. You can start with as little as $100, and the key is to start small and learn as you go. Avoid the temptation to go all in initially. Only invest what you can afford to lose. A good strategy for beginners is dollar cost averaging, where you automatically buy small amounts of crypto over time, regardless of market conditions. Timing the market is tough, but buying when prices are low and fear is high can often be a good strategy. When deciding how much of your portfolio should be in crypto, balance it with your risk tolerance and other investments. Historically, just 1% of a portfolio in Bitcoin can outperform traditional stock bond portfolios. Crypto is a highly speculative investment, so understanding what you're buying is essential. Crypto assets are intangible, and while Bitcoin is seen as digital gold, Ethereum offers broader utility with decentralized finance, DeFi, and NFTs built on its network. For beginners, a 50-50 split between Bitcoin and Ethereum is a simple way to get exposure to the crypto space. However, if you're looking to make big gains, altcoins can offer higher rewards, though they come with higher risk. To start buying crypto, you'll need to open an account on a crypto exchange like Binance or Kraken. Verify your identity and fund your account. However, remember that exchanges can be risky, so it's important to transfer your crypto to a personal wallet to secure it. Making money in crypto involves buying low and selling high, but also understanding market cycles and sentiment. Additionally, you can make money by staking certain coins like Ethereum or by participating in DeFi protocols that earn you fees. However, taking profits is key. Don't let your gains slip away by not selling when it's time. Ultimately, crypto investments can be highly rewarding, but also very volatile, so always be careful and think long-term.